crores. Sales are also much lower than what the street had anticipated. They have taken into account the fact that they've taken back almost 15 crores of sales, which they would have accounted as net sales because of the lack of Maggi sales, which they've taken off the shelves as well. They've gone ahead and said that they will only start Maggi noodle sales after a regulatory nod, and the large part of hit is coming in due to the Maggi ban. Avinnash, like you said at the beginning of the show, there's pressure across the board. FMCG, you've got Nestle reporting numbers that are below estimates. There's an exceptional cost as well coming in, about 24 crores for Nestle. You've got Bharat Forge, like you just heard Pranoy talk about it, and the e-commerce side of it as well with Just Dial. Nothing seems to be working. Is this going to be even further more downgrades coming in on earnings?
No, I think if you talk about Bharat Forge, I think the markets were anticipating a weak quarter, but I think the number which came out is extremely disappointing. I think the US Class 4 truck sales have been negative, so that obviously had an impact on their revenue and profits. Talking about Just Dial, I think clearly in terms of valuations, Anu, I think still the stock looks pretty expensive. We've seen a 10% cut in the last 1 or 2 days, but if you see the kind of management commentary and the guidance, my sense is I think the third and fourth quarter could be equally pressurized on margins.
Right.
And overall, I think probably we could definitely see earnings cuts being announced probably after this quarter. I think I wouldn't be surprised probably instead of any earnings growth for FY16, we could have to cut earnings growth, and probably most of the earnings growth could be back-ended from FY17 onwards. So the next 6 months are going to be equally challenging.
IPOs, Avinnash, 2 open, 2 shutting, as like both of them shutting out as well. Indigo has shut out with extremely good subscription numbers. The heavyweights of all sorts of HNIs have invested in it, close to 400 crores, what sources tell us. Kelkar as well, fully subscribed. Do you think there will be listing gains, but wait it out to see how they really perform?
No, I think if you talk about Indigo, I know the company has been doing extremely well if you look at it from an operational point of view, but the kind of risk reward offered on the table, my sense is for a retail investor who wants a listing gain, I don't think you could expect a very big fireworks kind of price. Clearly pricing is very tight. Talking about the other company HS Kelkar, which actually is into aromas and fragrances, this is a niche play and probably could give better returns in the longer term, because not many companies in this business operate, and this is a very niche model. You have a product, you have a customer, everything is customized. But clearly from listing gains point of view, I would say Indigo, I think probably you'll see a lot of selling pressure once you get a good price. There are a lot of people who probably have applied only for the listing gains, and if you look at the price reward ratio, I think despite the fact that it's a great company, I think there are some surprising questions on the dividend outflows, then the financial leverage, I mean the way they report their income. So I would suggest that it's better to wait and watch. Probably if I would prefer to buy Indigo post listing, once things settle down.
Fly Indigo, don't buy the stock just yet. Avinnash, thank you so much for speaking with us.